You're welcome back. Now let's look at the third guideline for the structure of a financial statement, which is the classification of expense by nature or by function. An entity shall present an analysis of expenses recognized in profit or loss using a classification based on their nature or their function within the entity, whichever provides information that is reliable and more relevant. Using the classification of expense by nature, an entity aggregates expenses within profit or loss according to their nature. An example of a classification using the nature of expense method is as follows. Okay. You will see that expenses are classified based on the nature of items. Here, the first expense we have was these changes in inventory of finished goods and work in progress. This is basically the cost of purchase of finished goods and work in progress. Also, you have work performed by the entity and capitalized. This is also the cost of raw materials, labor, and probably other expenses incurred in producing an item which the entity wants to use for personal use. Maybe it is built for the managing director. However, when this asset was built, they capitalized it as an asset within the entity. What is important is that the expense that was incurred is classified based on the nature of the expense. So this work performed by the entity and capitalized are simply the cost of raw materials, the cost of labor, and transportation cost. Also, we have raw materials and consumables. Okay, so this is just the cost of the purchase of raw materials. Also, we have employee benefit expense, which is staff cost. And we have depreciation and amortization expense, as well as impairment of property, plant, and equipment. And we have other expenses and finance costs. These expenses are classified based on the nature of that item in terms of raw materials, work in progress, finished goods, staff costs, depreciation, and other expenses. Okay, so that is classification based on nature. Using the classification of expense by function, an entity classifies expense based on the function of the item. An example of classification using the function of expense method is as follows. Here you can see that expenses are classified as either cost of sales, distribution cost, and administrative expenses, as well as other expenses and finance cost. But the main classification are the cost of sales, distribution, and admin. Okay, these are classification based on the function of that item. This classification by function can provide more relevant information to users than the classification of expense by nature. But allocating cost to function, like allocating cost to either cost of sales, admin, and distribution cost, may require arbitrary allocation and involve considerable judgment. An entity classifying expenses by function shall disclose additional information on the nature of expenses, including depreciation and amortization expense, and employee benefit expense. This means that the entity must break down the component of the cost of sales, distribution cost, and administrative expenses in the notes to the financial statements. And the choice between the function of expense method and the nature of expense method would depend on historical and industry factors and the nature of the entity. A manufacturing entity will most likely use the nature of expense method because they process raw materials to finish goods while a trading entity will most likely use the function of expense method. The standard requires the management of an entity to select the presentation method that is reliable and more relevant. So they can select any of the methods, irrespective of their nature or the industry they belong. Now let's look at the statement of profit or loss and other comprehensive income in more detail. The statement of profit or loss and other comprehensive income shall have subtotals and totals as the profit or loss for the year, the total other comprehensive income, and the total comprehensive income for the period, being the total of profit or loss for the year and total other comprehensive income. From the statement we provided, you will see that we have a subtotal for the profit or loss for the period, the total other comprehensive income, and the total comprehensive income, which is the addition of this profit or loss for the period, this total other comprehensive income. An entity shall present the following items in addition to the profit or loss and other comprehensive income section as allocation of profit or loss and other comprehensive income for the period. As you can see, we have the profit or loss for the period attributable to non-controlling interest and the owners of parent, and the total comprehensive income for the period attributable to non-controlling interest and owners of parent. This attribution of profit or loss for the period and the total comprehensive income is applicable for a consolidated entity. When we learn consolidated financial statement, you will understand this better. If an entity presents the profit or loss in a separate statement, it shall present the attribution of profit or loss for the period in that statement. You need to know that this statement of profit or loss and other comprehensive income can either be presented as a single statement, like in this case now we have it as a single statement. We can present the statement of profit or loss separately, so it will end in this profit or loss for the period. And we are going to have a separate statement for the statement of other comprehensive income. So we'll have two statements. You can either present it as a single statement or two separate statements. Either way is acceptable. The items of income and expenses in the statement of profit or loss arise from the normal trading activities of the entity, while items of income and expenses in the statement of other comprehensive income arise from remeasurement of assets or liabilities. The separation of items of income and expenses in the statement of profit or loss from that of the statement of other comprehensive income is necessary because items of other comprehensive income are unrealized gains because they arise from remeasurement of assets and liabilities. It will therefore not be reasonable to include unrealized gains as a component of the profit or loss for the period, because it is from this profit or loss for the period that you pay dividend. So if you are using unrealized gain to increase your profit or loss for the period, how will you justify the non-payment of dividend to shareholders? So it is better to keep it in other comprehensive income until it becomes realized. When these unrealized gains become realized, they will be reclassified to statement of profit or loss. This is what IAS 1 calls reclassification adjustments. Okay? Reclassification adjustment. For example, this exchange difference on translation of a foreign subsidiary will be realized and reclassified to the statement of profit or loss when the foreign subsidiary is disposed. Okay? Also, This gain on available for sale financial assets will be realized and transferred to the statement of profit or loss when the available for sale financial asset is derecognized. And also, when this cash flow hedge forecast transaction affects profit or loss, it will be reclassified to profit or loss. The following items of other comprehensive income will not be reclassified to statement of profit or loss. We have changes in revaluation surplus. This change is usually transferred directly to retained earnings. It does not go through the statement of profit or loss. You will learn that when we get to IAS 16. Also, these actuarial gains or losses on defined benefit plan will never be reclassified to statement of profit or loss because it will not become realized. You will learn that when we get to IAS 19. And finally, an entity shall present the items of other comprehensive income, either net of tax effects or before related tax effects. In this case, a one-line item will be shown for the aggregate amount of income tax relating to these items. In the next video, we will consider other statements. So thank you very much. See you in the next video.